Mark Boren. I'm the CEO at Polygon Labs and very excited to be here because you're watching Taking Stock.
2 minutes to go here until the closing bells. Time to rock and roll down here on the trading floor of the New York Stock Exchange. Welcome to the broadcast, one and all. You are watching Taking Stock, and I'm your host today. I'm JD Durkin. Thank you for tuning in on yet another history-setting day down here on Wall Street. For a second consecutive day, the S&P 500 expected to close at all-time high territory. That benchmark index is not alone at this hour. The tech-heavy NASDAQ also looking at fresh all-time highs. The S&P looking to close above 7,000 for the second consecutive session. Energy, telecom, technology shares, those are your strongest performing sectors in the S&P 500. And your S&P 500 laggards include healthcare, discretionary, as well as industrials. The Mag 7 tech stocks are in mixed territory as we head into the final auction here on this trading Thursday. Microsoft shares having a strong tape. It's been a while, up more than 2% into the close. Shares of Apple are down about 0.9%. Volatility somewhat flat to the day, flat to the downside, trading back down at a 17 handle, essentially the lowest level the VIX has been at since before the conflict in the Middle East started. Gold flat to the downside, silver down just a bit on the day, but the oil benchmarks, as well as all oil and energy stocks, moving up. Interesting correlation. They haven't traditionally moved the same direction as equities since the conflict in Iran started. Kind of an interesting tape today. S&P expected to finish at a new all-time high close. The team from Morgan Stanley here to do the closing bell. More Taking Stock after this. A lot of enthusiasm. Everyone loves the all-time highs, huh? Now we're rocking around tail the tape on this Thursday, April 16th. I'm glad they put the date up here because otherwise I got so much in my brain I would forget what day of the week it is. Thursday, April 16th, the S&P 500 up 0.25%. The Dow 30 also up 0.25%. The New York Stock Exchange Composite Index flat, 0.00. I've been here many years. I don't know if I've ever seen that. The Russell 2000, the small caps, also eking out a gain in the final few minutes of the trading day of 0.2%. Verizon, IBM, Cisco, your strongest Dow names, your Dow laggards on the day, Boeing, J&J, as well as Merck. Let's bring in our first guest. He joins us via Zoom. This is Ted Thatcher. He is a president at Bright Lake Wealth Management. Ted, happy S&P 7,000, happy all-time highs. It's great to have you here. What is driving, you think, this massive disconnect we're seeing between a record market rally with the S&P at 7,000 and change and weakening consumer sentiment happening at the same time? Ted, what's going on here?
Yeah, JD, it's impossible to look at the landscape and not see this incredible discrepancy between what's happening on Wall Street and what's happening on Main Street. It's like the equity markets have totally forgotten about the war in Iran entirely. You know, if we look at what's happened since the March 30 lows, the last 12 trading days have just been incredible. Of course, kind of being sparked this rally by those semiconductor names, the Microns, the Nvidias, the Broadcoms of the world. And now, of course, we've kind of seen a little bit of some of that reconcentration narrative that we saw a lot in 2025. You know, you mentioned, of course, the sectors that have done well, driving us to the second consecutive close above 7,000 today.
Are markets underpricing the impact of weak real income growth as well as rising household debt? I know you're tracking these metrics closely, Ted.
Yeah, you know, when we think about where the consumer is, you know, I think about that consumer sentiment number the University of Michigan put out, JD. It's at 47. You know, that number did print before the ceasefire talks, but the consumer's in a hard spot in several ways. You know, we talk about certainly wages, we talk about the housing piece. And really, I think it just bleeds into a broader discussion about inflation. You know, we saw CPI come in, you know, with a 3.3 annualized handle. We saw PCE bump up. And one number I've really had my eye close on throughout this conflict in the Middle East actually has been the PPI number that we saw come in with a 4 annualized handle. Why is that number so important? Of course, it's because it's the number that businesses are getting, you know, that being a leading indicator for other parts of the economy. And so even if we are able to sweep the entire Iran war somehow under the rug on the market side, the consequences of it will have to move through the real economy and how it will affect consumers, in their day-to-day lives.
Ted, we're still talking a lot about the AI-led rally. How sustainable is that AI-led rally, especially with software? A lot of these big software names, they're still pretty deeply oversold.
Yeah, a couple names stand out. You mentioned Microsoft had a great tape day. Microsoft's been a name I've been, I think, really bullish on kind of through the J curve here. They got all the way down to 375 a share, closing the day at, 420 or so, if I got my number right there. Microsoft, it's interesting. It's trading so far below the broader S&P at about a 26 times multiple compared to the S&P's 30. That's, Microsoft, obviously getting crushed because of so many of these Anthropic headlines. It seems like every time, Anthropic releases a new Claude plugin, service, agent, whatever it is, these names have gotten drugged down. We're starting to see that again come back up. Why? Well, I think that the market is starting to realize that Microsoft has just an incredible amount of distribution in the business place. Think about just how entrenched they are at Fortune 500 level in businesses across the country. The narrative that I'm seeing with Microsoft, to me, actually mirrors a lot of the narrative we saw with Alphabet last year, and it's worth spending some time on. Alphabet, May, June of last year was on the green mile. We were sending them out. ChatGPT was going to destroy their search business. It's almost like we think Anthropic's going to do the exact same thing to Microsoft. Well, what has happened to Alphabet since then? They've gone on a huge rise, increasing their valuation by 80%, going from a 19 times multiple to trading where the S&P is at over 30, I think it is now. And Microsoft, I believe, is kind of poised to make this same sort of narrative, change.
Yeah, a lot of revaluation happening for the software names, the tech names. Ted, you're an outstanding guest to kick off the broadcast. Please come back anytime. Ted Thatcher, president at Bright Lake Wealth Management. My man, nice to have you. Todd, you're not going to head this way. We'll bring you the latest analyst calls here on Wall Street that move the tape today. First up, Mizuho downgrading PayPal to neutral from outperform. They say the stock is at a scale disadvantage, lowering the price target to only $50 a share. Next up, UBS upgrading BP to buy from neutral. They say it is bullish on the company's news management. Shares of BP up 35% already year to date. And finally, JP Morgan downgrading Qualcomm to neutral from overweight due to rising competition from other competitors in the space like NVIDIA. Qualcomm shares down 22% since the start of 2026. Time to take a look at a few notables that trade down here at the trading floor of the New York Stock Exchange. How about Dick's Sporting Goods? Up 0.4% on the day. BTIG analyst initiating coverage on the stock with a buy rating, saying it sees product innovation for the largest omni-channel sports retailer in the U.S. Shares of DKS already up 10% since the start of 2026. Todd, let's take a look here at Equifax. Strong tape for a strong day on the street, up almost 2%. Mizuho initiating the stock with an outperform rating earlier this morning. They say the credit company is compelling at these particular levels, giving it a price target of $222 a share. The stock is down 12% since the start of the year. Cheddar's very own Justine Miller recently had the opportunity to sit down with legendary astronaut Chris Hadfield. They discussed the Artemis II launch and so much more. Please take a look at part 2 of their recent interview.
As Artemis II just returned from traveling around the moon, the convergence of space exploration, artificial intelligence, and private capital is redefining what possibilities lie beyond Earth's atmosphere. Joining us now to discuss all of this and more is retired Canadian astronaut, former commander of the International Space Station, best-selling author, and board member of Atomic 6. When you think about Artemis, it represents a very different kind of moon program than Apollo did. It's international, it includes a more diverse crew, and it's operating alongside a booming private sector now. So how does this shift really change things, and what does that mean as we look to the future?
I think the big fundamental difference, Justine, is we have now gone through the exploration phase, which was Apollo. It's sort of like how we went to Antarctica 100 years ago. Our technology was just barely good enough to get there, and a lot of people died just trying to explore Antarctica. And we just about lost the Apollo 13 crew trying to explore the moon. But now the technology has gotten significantly better, and we're transitioning from exploration to settlement, just like we did in Antarctica over the last century. And that brings all other forces to play, as you say, improved technology, international cooperation, just like in Antarctica. There were, 3 Americans and a Canadian on this Artemis 2 flight. And the huge opportunity commercially for first building the equipment for the governments, but eventually looking for just regular commercial opportunities that will crop up on the moon. Big difference between Antarctica and the moon. Antarctica has life, and we have to be really thoughtful about how we disrupt the biosphere of all the animals that live in Antarctica. The moon has no life. There is no biome to disrupt. It's basically a huge resource the size of Africa that we have now access to. And so it's a really exciting and interesting time in history, technologically, commercially, but also policy. How are we going to do this all together?
Yeah, it's so interesting. And that's a great parallel to draw between this exploration now and what's been done with Antarctica. Thinking about what has been done in space and now what's going to be done and what people are trying to do there. You're on the board of Atomic 6, which is working to put data centers in space for people who haven't heard of this concept before, who don't really know what we're talking about. Tell us a little bit more about this core idea and why it makes sense to start doing this now.
Well, everybody in their pocket, has a tremendous access to artificial intelligence of some level. You can put in almost any question here, and it'll pop up an answer. Most of the time, right. But what's behind that, and the communications links, but then somewhere there's a great big computer handling all those requests and searching through all the databases and trying to create a coherent answer. And as artificial intelligence and the large language models get better, it becomes easier and easier for people to ask more and more complex questions that requires more compute. It requires more data centers. And the trouble with a big earthbound data center is that you have all these computers in a room and it needs huge air conditioners because the computers get hot. And then something has to power those air conditioners. So you need a big power source. And then you've got to somehow cool all of that, which normally requires a big water resource. And there's only so many of those on Earth. And not a lot of people want them in their backyard or right next to them. So how are we going to solve that problem? And up until very recently, it wouldn't have worked in space. But we have had some recent advances in technology that suddenly make it credible. And people need to rethink their whole perception of what a data center looks like. But imagine if you had 1,000 satellites, each of them with very high powered, capable like computer chips on board, and then eternally powered by the sun, and then having a radiator that sends the cooling out to space, and then all of them communicating using super high precision pointing lasers and light to transfer the data between them. Suddenly, that's a credible way to do a data center. And you just have to get the launch costs low enough so that you can put 1,000 satellites and still make a profit. And that's where we are. That's what's happening right now. That's the big transition. That's why, Google and Planet are doing it together. It's why Blue Origin is so interested. It's why SpaceX is interested. Everybody suddenly realized we've hit the tipping point. But the key of that is you need you need lots of solar power, and you need good cooling, and you need to be able to protect yourself from micrometeorites and the radiation of the universe. And that's why I'm so closely aligned and advising Atomic 6, is because they build uh, one of the most efficient solar array mechanisms and deployables that exists on Earth. They have a thing called Hot Wing, a great design in order to cool a spaceship like that. And they build space armor in order to be able to protect the precious cargo inside. So they're in a great position to provide all of the technology that the industry and that customers need, just as we're making this transition.
Well, it's just incredible. Thank you so much for being here, Colonel Chris Hadfield. So much to talk about. I could talk to you for hours. We really appreciate all of your time today. Thank you so much.
Thank you, Justine. Pretty exciting week in space travel and way more to come.
the broadcast. You're watching Taking Stock live from the trading floor of the NYSE. My next guest joins us now down here at the FinTech TV booth. John Haar, Managing Director at Swan Bitcoin, also my former college roommate. My man, welcome back to the show. Nice to see you again.
Good to see you, JD.
I want to ask you about crypto price action. It seems as if relatively range-bound, a support level around 65, resistance up to 75, has not really been able to budge out of that range since early February. How do you look at a chart like that?
Yeah, so we at Swan would say definitely agree there seems to be a support level, certainly in the 65 to 70K range. We've kind of been trading in the 65 to 75K range for quite some time. It seems like it's been hard to break above that, as you said. What we're starting to feel more confident about is that 65 level is looking like a support level, looking like a bottom. Obviously, these things are hard to predict. External events, external shocks could happen, but we're getting more confident that 65 to 70K is a floor. So that's the first thing we would want to say before we can say we're likely to go much, much higher from here. We're not getting that confident yet, but we do think that 65K level is a likely bottom.
Yeah, down here on the show, we've been talking for more than the last year about institutional adoption. We got a lot of the big heavy hitters in the world of finance making some big moves. I'll ask you about these: Morgan Stanley, Goldman, and Schwab. Which one of those you want to start with, and why do they matter right now?
Yeah, so this is one of several reasons why we think that 65 level will have a lot of support, is this institutional adoption that was really just absent in a year like 2022, which was the last tough year for Bitcoin. Fast forward 4 years ahead, 2026 is a tough year for Bitcoin, but we think it's not going to be nearly as tough as 2022, and it's because these institutional players are embracing Bitcoin. So I think the first one that has to be mentioned is Morgan Stanley. As you said, they rang the closing bell here. They're launching a Bitcoin ETF of their own, and that's critical because there's already 10 Bitcoin spot ETFs that have existed for 2+ years. So you have to ask, why is Morgan Stanley launching their own in this environment? And I think the punchline is they believe, with all of their assets under management, all of their advisors, all of their clients, that Bitcoin will be a persistent allocation in those portfolios going forward. And that's why they're launching. They don't think that Bitcoin is hype, in my opinion. They think it's here to stay. It's going to be a persistent allocation. So that's why they're launching that ETF.
Yeah, Morgan Stanley shares overall up fractionally on the day. Speaking of embracing crypto and Bitcoin, Michael Saylor's strategy, are they ramping up Bitcoin accumulation? What is the latest for folks who don't follow the ins and outs of Mr. Saylor's positioning?
Yeah, so they have gotten very creative in the past few years, and they continue to do it with ways to raise capital to deploy into Bitcoin. Their latest strategy that they're hitting pretty hard is this STRC, known as Stretch vehicle. It's a perpetual preferred instrument, and there's some details behind it, but it's essentially a variable coupon. It pays 11.5% right now, and a lot of people are buying that. It's meant to stay at par at 100, and it's done a decent job of that. But everyone who buys that, they take the capital and they put it into Bitcoin. Just to give you a sense of how much Bitcoin they're buying now relative to years past, in the year 2022, they bought a total of 8,000 Bitcoin as a company. They're averaging this year about 8,000 Bitcoin accumulated per week in 2026. So it's just orders of magnitude bigger now than it was in the past, and it's because of these types of vehicles.
Yeah, he's buying the dip, to say the least. That puts it lightly. John Haar, Managing Director at Swan Bitcoin. My man, thank you for being here. Please come back on the show anytime.
Always great to be here. Thanks,
My best
JD.
to your family. Don't go anywhere. A lot more Taking Stock coming up live from the big board right after this. Woo! There it is. Welcome back to the show. Time at this hour for a few headlines in the world of fintech, crypto, and artificial intelligence to head into your Friday. At this hour, Bitcoin up 0.7%, holding on to 75,370. ETH trading flat. Solana, the big winner among the crypto majors, up 6% into today's close. Next up, Bitcoin ETF demand continues to build with another $186 million in inflows as Morgan Stanley's new fund crosses $100 million in just 6 days. And finally, crypto moving deeper into the world of politics with Cantor Fitzgerald donating $10 million directly to Tether's pro-crypto PAC as the industry pushes for clearer rules of the regulatory road. And now Money 2020's very own Scarlett Sieber is back with a new edition of Jargon Translator, where she puts complicated finance terminology into language that anyone, even me, can understand. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is deceptively simple and incredibly powerful. The word is float. Float is money that sits with a company temporarily before it gets paid out to someone else. This is a term that you should definitely know because the neobanks are all over this baby. Insurance companies collect premiums long before they pay claims. That gap is float. Payment companies hold funds for a few days before settlement. That's also float. Banks hold deposits while customers decide what to do next. That is definitely float. Here's why float matters. While that money is sitting there, it can earn interest. At scale, i.e. a lot of customers, float becomes one of the most powerful and quiet revenue engines in all of finance. Some of the most successful financial companies in history built empires on managing float responsibly. So, float is not free money though. It only works if customers trust you. It only lasts if withdrawals don't spike. And it becomes especially valuable when interest rates are high. When trust erodes or liquidity tightens, float disappears fast. Companies that rely too heavily on it without managing risk learn the lessons the hard way, and we have seen some of those. Float rewards discipline, transparency, and timing. Abuse it, and the costs show up quickly. Float isn't cash you own, it's confidence you're borrowing. And with that, that is your jargon translated. If there's a finance term you keep hearing and want the real story on, put that in the comments and it just might make the cut. In the meantime, back over to you.
Welcome back. Earlier this morning here on NYSE Live, Ashley Mastronardi caught up with CEO Jill Wyant of Madison Air to discuss their big IPO here at the big board. Take a look.
And joining me now is Jill Wyant, the CEO of Madison Air. Jill, welcome to the New York Stock Exchange.
Thank you so much, Ashley. Delighted to be here.
I saw you up there ringing the opening bell. What was that moment like the morning that your company is going to go public?
Well, ultimately, as CEO, I'm incredibly proud of the team, our companies, our brands, and really the performance that got us here. It's an important milestone for the company, and couldn't be prouder of our team.
And you mentioned you have over 8,000 employees. Is there any message that you want to send to them today?
Just thank you for your commitment to making the world safer, healthier, and more productive through the power of better air, for living our values of trust, bias for action, and entrepreneurialism, and really putting your heart and soul into making great products that drive, real return on air. This idea that we are everywhere, air drives performance, productivity, reliability, and human health. Just huge gratitude. Big shout out to our team.
And often when people see a company IPO, they're not there for the decades, that it's taken to get to this point. What did it take to get here today?
Well, at the end of the day, what got us here is what will power us forward. It's continuing to serve our customers with the highly engineered solutions that make their businesses better, to take good care of our team, put heart and soul into all we do, and lifting up the nearly 9,000 people that work for us. It's really about driving disciplined performance and thinking over long time horizons about consistently delivering results. So we've done that to this remarkable day, and tomorrow at 8 a.m. we'll get back to doing it all over again as we proceed from here.
How would you describe Madison Air to viewers?
So, the irony is most people don't think about air. We take almost 25,000 breaths a day. We spend up to 90% of our time indoors, where the air can be upwards of 5 times as polluted as the air outdoors. So at Madison Air, we really see air differently. We bring highly engineered solutions to mission-critical commercial and residential end markets, and by doing so, really drive better outcomes for them. So from data centers to advanced manufacturing environments, from hospitals to millions of healthy homes, we are everywhere air drives performance, productivity, reliability, and better human health.
What is your intention with this IPO? What is your hope?
Well, our why underlying this IPO is really to give us access to the permanent capital structure that will allow us to continue investing, growing, and scaling our mission, which is, again, to make the world safer, healthier, and more productive through the power of better air. 100% of the IPO proceeds will be used to pay down debt. But really, this is about, and 75% of our shares are subject to a 2-year lockup, so employees, leadership, and investors are in this for the long haul. Really excited to spread more mission by serving customers with our differentiated solutions.
And why did you want to tap the capital market?
Well, really, it's that access to the permanent capital structure, right, that will allow us to underwrite generations of our growth ambitions. And humbly, we also think it's a function of who we've become. Our team, the caliber of our performance, and very strong underlying momentum in this business. So we're really, it's an important milestone. We're excited about the journey ahead.
What's next?
Well, again, like I said, tomorrow we are all about continuing to serve our customers and spreading more mission to keep the world safer, healthier, more productive, taking care of the team, driving disciplined execution, and thinking across long time horizons to deliver sustained returns from our trusted investors.
All right, Jill Wyant, CEO of Madison Air, thrilled to have you on the show. Congratulations on this incredible milestone.
Thank you so much. Thanks for having me.
Hello and goodbye. Thank you for watching today's edition of Taking Stock. Have a great night. We'll see you again tomorrow.